Good morning. Welcome to Market Day Report. I'm Tony St. James, and welcome to a Wednesday. We're trading already. Overnight trade action, grains have been moving higher, and the corn market here is higher as well. Let's go to the board as it's a quarter penny higher. Not anything really to throw a ticker tape parade for, but 425 3/4. In the overnight session, December is unchanged at 443. And when you start maybe celebrating not being lower, well, okay. 8 cents higher for July beans is helpful, though. 11.71 1/4. The November, though, new crop at 11.10 3/4. It's down 3/4 of a cent. What are we seeing over in the wheat markets? We'll start in Chicago. 540.5 on the July, down 1 1/4. December off 1 1/4, 581.5. And hard red winter wheat. Now the harvest moving into Kansas. July 575 3/4, down 1/4 penny. And the September unchanged 581.5. Let's go to Minneapolis. Spring wheat trades there and higher at 598 on the July, up 2 1/4, 3 higher on September, 606.5, and some overnight trade for cotton. It was really in positive territory until just recently. The October contract 49 lower, 73.72, and December has been above 75, but 74.64, down 43. Let's talk a little bit more about markets, and we'll go to Brian Hoops, Midwest Market Solutions. And Brian, as we start off the morning, again, a couple of things we're focused on. Friday, we get a couple of reports from USDA. One of those is an acreage report. One is a stocks report. Are we expecting any surprises there?
You know, it's hard to always guess if we're going to have a surprise, but you look at the range of estimates going into that report as far as acres go for both corn and soybeans, and they're a very small range. You know, kind of the average guess is for an increase of corn acres and soybean acres, but only by around 300,000 each. That, I think, could be a real surprise. We could see something shifting much larger than what the trade wants to believe. Now, historically, 6 out of the last 8 years, saw the USDA raise corn acres from March to June, so there's kind of a precedent that they will raise these acres. Soybean acres have not been above the average trade guess in each of the last 9 years. So you look at that average trade guess, and maybe we see some sort of a surprise where the soybean market isn't as high as what the trade is expected. And in fact, over the last 2 years, USDA has actually lowered soybean acres from March to June, and that holds true for 3 out of the last 5 years as well. So kind of a precedent: raise corn acres, lower soybean acres in this report from the government, at least over the last 5 years or so.
So we could see something possibly bullish out of this report, but one area that it's hard to find anything bullish about is the wheat market and finding buyers.
Yeah, no, you're exactly right. It's been an anchor to the Board of Trade, the wheat market. I think there's been one day in the entire month of June that we've closed higher in Kansas City wheat. So it's gone a long stretch here where we haven't seen much higher prices at all. And part of that has to do with the fact that we're just not able to export a lot of this wheat crop. Now, you look at yesterday's Egyptian tender. They bought 470,000 metric tons of wheat, but look who wasn't included in putting any tenders out there: the U.S. There was 4 different countries: Russia, Romania, Ukraine, Bulgaria. That's who bought Egyptian, or that's who sold wheat to Egypt. And then you factor in Argentina, you factor in Australia is going to have a much bigger crop this year. That puts the U.S. in probably maybe 7th or 8th place as far as sending any wheat out on a significant basis into the world marketplace. It tells us that even at these price levels, we're still not price competitive. So we may have some small rallies. I would suspect those rallies fail and we push even lower yet. We've been a couple of weeks ago, we talked about being below $6. Well, we're there now, and we're still not stimulating demand. We're probably going to have to fall even further to where we can start exporting some of this wheat crop.
So definitely a downside to a strong dollar. Speaking of strong, let's talk strong markets. Livestock Cattle have been strong. We'll talk more as Market Day Report continues after this. This is Market Day Report. Well, we don't trade livestock in overnight trade, but we did see mixed action at the end of the session yesterday. And some of that preparing for a cold storage report that rolled out from USDA. We'll talk about that in just a moment. First off, let's look at how cattle ended the session yesterday. Mixed trade front month June on live cattle, 57 higher, 189.47, off 40 cents on the August at 184.42. For the feeder cattle, August, the most active at 259.05, was 15 higher, though the deferred's in the red. And the hog market, again, struggles with the exception of that August contract. Couple of pennies higher at 86.75. Let's bring back in Brian Hoops. Brian with Midwest Market Solutions, Springfield, Missouri. And Brian, we got that cold storage report from USDA, and I'm just trying to remember. We get a lot of things in that. We get fruits, we get vegetables, things we don't normally focus on. But the big one there was the meat. Primarily beef and pork. What'd you see?
Well, we did see a little bit of a drawdown. So beef and freezers down 3% from last month and slightly over the last year. Pork supplies also down 3% from a month ago and about 9% on the year. So it does tell us that we're starting to see a little bit of demand, at least from that retail level, or that packers, the commercials had it in the coolers. They may have to fill up those cooler levels once again, and that's probably what they're starting to do in the hog market because we've had such a free fall in the hog futures. Now they're stepping in and probably filling up those coolers. Not so much in the cattle market where we've seen higher prices, and we probably will see higher prices again this week, possibly into next week. You know, the cutouts have held in very well as the packers have slowed kills a little bit. We're down maybe 13,000 head so far this week compared to a year ago levels. And, you know, we're down significantly on killing cattle compared to year ago levels so far year to date. Part of that is because we have heavier carcass weights, 36 pounds heavier than a year ago. So it means they don't have to kill as many animals to reach that tonnage that they desire. But next week we have a holiday shortened kill week. That'll help out the box beef and the cutout values stay strong, keeps the packers supplied with positive packer margins. They're about $18 a head. So it gives them opportunity to pay higher cash trade. And I think we're going to see that this week, probably into next week. And, you know, then we start to wonder if we get past 4th of July demand, Father's Day demand, will demand start to drift off and maybe the futures follow that demand a little bit softer into the end of summer.
And we really didn't even talk about the export side of this. We'll get export sales, the weekly export sales report out on Thursday. Get a better idea of who's in the market for U.S. beef and pork. Brian, come back and see us next week. Brian Hoops, Brian with Midwest Market Solutions. It's a Wednesday morning.